So the case for crowdfunding is a pretty simple case. Right now, the financial system in the United States serves the top 1%. The participation in investment, the participation in the access to capital is done by those who have money. So the unaccredited investors among us, the people that are occupying neighborhoods throughout the United States, they're not really involved in that process. Entrepreneurs and small businesses are starting to disappear across the United States because their access to capital is very difficult. So right now, if you're an entrepreneur, you have a few options. You can go to a lender, traditional banking. And the interesting thing about traditional banking is traditional banking does connect unaccredited investors with businesses that need capital. It's just that a bank sits in the middle making all the money, whereas the unaccredited investors are collecting their 1% interest on the money in their bank, if they're getting that. A company can choose to do private placement, but private placement has its difficulties as well, finding investors, having the legal and the economic framework for their offering, and putting that together, advertising it, and drawing it to conclusion. A lot of companies, especially small businesses, aren't set up for that kind of infrastructure. Public markets, of course, are only serving the enterprise customers among us. Equity crowdfunding opens capital and access to investing to the other 99%. Now, this is proven. People understand the strengths of crowdfunding. Crowdfunding has an ability to connect small businesses and investors in a synergistic way, which no other access to capital can do. So it democratizes access to capital because now you can get your capital from your customers, you can get it from your social media following, you can get it from those people that already believe in you, as opposed to having to go to people like yourself or a bank or some other venue and convince them that you have a case. These people already know you. So for an investor, it represents the opportunity to invest in what you know. It's a very different environment for especially an unaccredited investor whose only options right now are to put their money in a credit union, in a bank. Perhaps they've put their money in a fund investing in an unknown quantity of companies. Someone else is collecting, once again, most of the benefits that are reaped from that investment, and they get their 8% or their 7% return, whatever they're getting on their 401k. The other thing that crowdfunding does, and this is probably the most important thing for small businesses, for entrepreneurs, is that it's a way of actually accessing marketing while getting capital. So if I told you that you could go to a bank, and by going to that bank and getting that money, it's actually going to spread word about your company everywhere, get a whole bunch of people involved as brand ambassadors to allow you to put viral marketing campaigns together, you'd take it, wouldn't you? The other thing that crowdfunding offers is the ability to set your own terms. How many people in here have actually gone to a bank and told them that they have their own set of terms that they'd like to use? Anybody? Yeah. How far did that get you? Not very far. Right? Because ultimately, when you're standing in front of either a VC or a bank or a credit union, you're hoping they're going to say yes. And for the most part, a lot of small businesses, a lot of entrepreneurs that have ideas that actually have communities of people that believe in them, their ability to get access to capital comes at the terms designed by the payer. Crowdfunding is a little bit different. So you get to set your own terms. Why isn't everyone using it? That's a good question. That's a question that I get asked all the time. So you're going to be a crowdfunding portal. Well, aren't there like 42 crowdfunding portals that are currently approved? Well, yeah, that's true. 37 of them, I think, are operating out of a closet somewhere. But there are some companies that are actually out there, Seed Invest, Start Engine, WeFunder, that are actually real companies that are trying really hard to kind of spread the word. Where are they going wrong? And that's a good question. So let's take a look at the process of getting into equity crowdfunding, which is Reg CF. First of all, you've got a cumbersome process of documentation. So first thing you have to do is you have to put together a Form C that gets filed with the SEC. Now, if you're working with a platform that actually helps you to do that, you're already 50% into a better situation. Most of the platforms out there don't help you. You go to your attorney, you put together your Form C, and you come back to them. So that's a tough process because that Form C could conceivably be a 60-page document. So putting that together is quite some work. There's perks. So in order to get investors to invest early in your offering, because if you don't get investors to invest early, it's not going to be very successful. You want to show some momentum because especially unaccredited investors, they like to see momentum in an offering. So you offer a perk. Well, at the end of that offering, when you get your money, now you have a whole list of investors that have perks that need to be managed by you. So you need to either hire somebody, give somebody the task to take all of these investors' names, make sure you know what perk goes with what one, and then figure out a method to actually fulfill those perks. There's no secondary trading. So usually when you invest in an equity crowdfunding stock, it's going to tell you, well, you may end up having to hold this for a very long time. So as a result, a lot of the equity crowdfunding sites have actually moved to doing debt instruments or revenue share instruments because then at least there's an exit strategy for the investor. They're getting some money as they go along. But for trading of equities, currently it doesn't exist, not for equity crowdfunding. And so that creates a problem for involving unaccredited investors because unaccredited investors often will have a life event that can cause them to need that money back. And if they can't get that money back, well, they're going to be a little bit less likely to invest that $1,000 or $2,000 in your opportunity. Then, of course, you're dealing with the management of payments and the management of investors. So at the end of your raise, you could have up to 2,000 investors that you have to deal with. Those are 2,000 investors that you have to communicate on a regular basis as to what's going on with your company. Additionally, if you do a revenue share or a debt instrument or even an equity instrument that has a dividend payment, you have to deal with the payments to those investors. Who does that? Do you have to hire a third party to do that? Those are problems and pain points. So what we've done is we've created solutions to these pain points. So for the first pain point, we've created something called a wizard within Fundapolis, which is a TurboTax-like interface that in small blocks and bits with the help of humorous advice as well as some videos, it gives you the information that you need to one bit by one bit enter all of the information that has to be put into that Form C. Additionally, you have to create a web page. Essentially a page that to the public sets up your opportunity, sets up all the terms of your offering, and sells your business to the public. Because no matter which crowdfunding portal you go to and how many investors they have on them, ultimately it's about getting eyes on your investment and then making sure that those eyes are reading something that's going to be a good presentation to them. It's going to be compelling to them. It's going to cause them to act. So what we've done is we've put together the wizard that not only puts together your Form C, gives it to you on a Word document that you can then give to your lawyers, and it's pretty much all done. They can just make whatever edits they feel are necessary, add risks that they feel might be necessary for the offering. But it also puts together your website. So we've identified certain areas and certain ways that investors like to see this information that pushes them to a call to action to invest. And then we provide a WYSIWYG interface for the laying out of the opportunity that comes in the middle. For the perks, we've actually developed a perk management system. So we're a blockchain-based company, and we use blockchain to give us certain advantages. So for perks, we actually issue what is the equivalent of a utility token on our private Ethereum blockchain, and that utility token is matched with a mobile app on the investor side as well as on the company side, and we handle all the fulfillment of those perks, and we manage who has the perk, who needs to be fulfilled, who's already been fulfilled. We even actually have a gift card-like mechanism, so if you wanted to have a perk that actually conveyed a value to an investor, we can actually manage that value as it comes down, and that's all done through our utility tokens. No secondary trading platform, so our actual vision is to acquire. We're in the process of acquiring a broker-dealer to facilitate A+ and D regulation offerings, and our intention is to become an ATS. And once we have an ATS, we actually already have the technology that will run our trading platform. The trading platform won't be for crypto or other tokens. It will only be for those tokens issued within our site. But our plan is that by June of 2020, which will coincide with the one-year holding period for those people that launch with us in May, we'll have a trading platform for them to be able to trade and to provide some liquidity. And we think that that's going to be important. As far as managing payments and investors, we provide a private portal between the company and its investors so that it can load social media marketing campaigns as they have them, so that you can use those investors to help those campaigns to go viral. Additionally, we use the smart contracts that are in the securities that we issue on our private blockchain to regulate not only the behavior of the securities, but the payment structures, so that a company simply needs to come in, make a single payment, and then the system will automatically disperse that pro rata per what each shareholder owns. So we plan on using technology to overcome some of these roadblocks. But the roadblocks in the technology aren't the only piece here, because there are other reasons why regulation crowdfunding hasn't been successful. So regulation crowdfunding was enacted by Congress to allow all of the normal people in the United States, all the Joes and Sallys in neighborhoods across the United States, to participate in investing in companies that they may know and they love. Similarly, it was designed to make it so that anyone, no matter what their class level, no matter what their previous experience in life, had the opportunity to take an idea and turn that into a company. Right now, that's not happening. Why is that not happening? Well, that's the interesting question, because what we found out when we did our market research and we did our focus groups is that 95% of the United States doesn't know about regulation crowdfunding. In fact, when we did our research, not a single person that we interviewed in our focus groups knew what regulation crowdfunding was. They thought that we invented it, which is great, because they were really excited about it. But ultimately, it exposes why this has not raised to the level that analysts were predicting for regulation crowdfunding. And that's important. So the question is, how do we get to those 95% of the people? So we can say we're going to do education, and we are. We can say that we're going to put a lot of money into marketing, and we're going to use data modeling to focus on people that don't know, and we are. And those are all good answers. But ultimately, how to get Joe and Sally involved in regulation crowdfunding. Does this mean I'm over time? All right. So anyway, to sum up, thank you very much for listening. We are in the midst of a funding round. If you have more questions, we have a booth right here. I'm happy to answer questions. Happy also to shoot this deck to anyone who's interested. Thank you very much.